Welcome back. You're watching India Market Open, and IndiGo is a stock that we've already discussed, and we've spoken about how this has been a fantastic investment for Rakesh Gangwal. Well, he's set to sell additional stake in the company along with the Chinkapu Family Trust, and we've got Somit joining in to tell you about this particular deal as well as all of the stake that has been sold so far and how much that amounts to. Somit.
Yes, IndiGo will remain in focus. The Gangwal Group will be selling their stake, partial stake, via block deal today. So they are looking to sell close to 2.1 crore shares. That is 5.5% of the equity. The offer size is close to 11,000 crore rupees, and the offer price is around 5,175, which is at a discount of nearly 4.5% compared to yesterday's market price. Now, post this block deal, there's a lockup period for the promoter to sell the remaining part of the stake, and that is of around 150 days, which means that for the next 150 days, there won't be any block coming in from the Gangwal Group at least. Now, this block deal will reduce the overhang that IndiGo had currently that was there on IndiGo, given the fact that everyone on the street knew that there would be a block deal coming in from the Gangwal Group. And post this stake sale, the Gangwal Group will be left with around 8% stake, which again could come on the block in at least one or two deals. Now, so far he has mopped up close to 26,900 crore rupees by selling his stake in IndiGo, and this deal will give him additional 11,000 crore rupees. Now, why Gangwal has been selling its stake? Now, he resigned from the board of directors of IndiGo back in 2022, and he had stated very specifically that he will be looking to sell his entire stake in the company over the next 5 years, and that is what he has been doing so far. Now, Rahul Bhatia and Rakesh Gangwal were the co-founders of IndiGo, and they had a fallout back in 2019, and this was owing to disagreements related to related party transactions and corporate governance. And since then, Gangwal Group has been completely exiting from IndiGo. Now, this has been an overhang on the stock price, but nothing wrong so far with IndiGo on the fundamental side, given the fact that they are the largest airline company in India with market share of more than 60%. They have been gaining on the back of strong air traffic, stable fuel prices and stable ticket prices. However, for the first quarter of FY26, they have hinted that it could be a bit weak compared to what it was last year, given the fact that there was geopolitical issues which had impacted the ticket sales in the first quarter of FY26. Now, how are analysts viewing IndiGo? Currently, if you look at all the analysts that have been tracking IndiGo, around 82% of them have a buy rating. There is hold, around 9% of them have a hold rating, while around 9% of them have a sell rating. And the 12-month consensus target price for IndiGo stands at close to 5,939 rupees, which suggests a return potential of around 10% from the current levels.
Somit, thanks for that, but I have a follow-up, Somit. So this is not the only deal, right? While there is Interglobe Aviation and Sagility as an OFS, the one that I pointed out in the morning was PG Electroplast. And I, for one, thought that because this is a clean-out trade of sorts, maybe there could be a bounce here. Anything that you are gathering from your dealing room sources or otherwise about PG?
Well, as the demand for PG Electroplast is quite strong, multiple domestic mutual funds have already shown interest for this block. And if you look at PG Electroplast, despite reporting a strong set of numbers in the fourth quarter, the stock has been quite range-bound. In fact, it was trading at around 900 rupees at one point of time and currently has been range-bound around 750. So yes, the stock could bounce back after the block, given the fact that this block was a big overhang on the share prices. Now here, if you look at, the promoters are looking to sell close to 1.59 crore shares, that is 5.6% of the stake. The offer is given at a price of 740 rupees, which is at a discount of just 4% to the market price, and the overall offer size is close to 1200 crore rupees. So yeah, the stock could actually bounce back, given the fact that this was a big overhang on the stock. And the second company that we need to watch out for is Sagility, where it's an OFS. Promoter is looking to sell up to 15% stake in the company. This is including the green shoe option, which means that if there is a strong demand, they will look to sell close to 15% stake. Now, this OFS will open for non-retail investors today and for retail investors tomorrow, that is May 20th, and the offer price for this OFS is around 38 rupees per share, which is at a steep discount of nearly 12% to the current market price. And post this OFS, the promoter holding could come down to around 67.4%, and this will also help the company or the promoter to meet the minimum public shareholding requirement norms that has been prescribed by SEBI. Now, if you remember, Sagility listed back in November 12, 2024, and the IPO price was 30 rupees. So the current market price is at a premium of around 43% to the IPO price, and this OFS is being done at a premium of around 27% when you compare it with the IPO price of 30 rupees.